Hey, Think Realty Nation, Eddie Wilson here, one of the founders of Think Realty, and I don't get to be on the podcast a lot, but when I do, I really enjoy it. And they always put some great guests on there, but I love hosting it with our normal host, our hostess with the mostest, I guess. I don't know.
Something like that.
Something
maybe.
like that.
Yeah,
You know, I don't know if that makes sense.
I'm not sure.
But Abhi Golhar, obviously, he is the one that's always on the show doing the hosting. I appreciate letting me invading your space today and being a part of this.
You know, like today is it's an interesting podcast, specifically this one, because you've got tall and like middle tall and then just short. Y'all about to find out what that means in a second. And I'm not used to that because I'm just doing all this virtually, but this is great. It's phenomenal.
Very good.
So.
Well, tell us who our sponsor is today.
You got it. Today's sponsor is RentToRetirement.com. Does 20% return on investing in turnkey rentals sound attractive? Well, if it does, Rent to Retirement offers fully turnkey properties that are newly built or renovated, leased and managed, allowing you to invest in confidence and with confidence out of state. They've got everything from single-family, multifamily, new builds across 15 markets that maximize cash flow, appreciation, and equity. Check them out. Go to www.renttoretirement.com. Today, we are visited and we have an amazing guest, Tom Hallock with PeerStreet. We're going to talk about how to build wealth using some of the loan programs that PeerStreet can offer, and what that means for you, the viewer, what that means for you, the real estate investor out there, because you know there's no shortage of capital and you want to know what works and how to get access to it. So let's get started.
Yeah.
Eddie, first question.
Tom, thanks for joining us today. Appreciate it.
Guys,
obviously, give our best to Brew and everybody over there, the crew at PeerStreet. Awesome relationship there. I get the chance to lead the American Association of Private Lenders as well as Think Realty, and so you guys have just been a fantastic partner through the years, and I appreciate that very much.
And we appreciate it, right? I mean, just a lot of the things that you guys do and information that you bring to us as members, but also to the industry and little things sometimes like recent California ballot initiatives, right? Just to be able to get there and understand quickly, inform our members, our partners, and even ourselves, right? Is real important. And one of those little things that you guys do that may not be appreciated all the time.
Yeah, well, thank you so much. I appreciate that. Appreciate you guys. Let's jump in and ask some questions. Obviously, the podcast is not necessarily just to highlight PeerStreet, although PeerStreet's a fantastic partner. It's really to take what you guys have from a knowledge base and your unique industry perspective and try to make sure that our viewer, which oftentimes is a real estate investor at Think Realty, help them understand how to invest more efficiently, practically, find tips, tricks, all that type of stuff. So PeerStreet is obviously in a different space, right? Like you guys started as a venture capital company. There was capital being raised and then now tying into institutional capital. Do you mind just kind of explaining the ecosystem, not necessarily to promote PeerStreet, but maybe so that the real estate investor understands why this is important, this thing that you're doing, how you're doing it is important to them?
Eddie, thanks. And actually this is a great topic for PeerStreet because we are actually built around the concept of developing wealth and removing some of the obstacles to that within the private real estate lending experience and ecosystem, right? And so PeerStreet is foremost a technology company and marketplace, right? Really trying to combine and touch and put together the investor on one end, the borrower on one end, right? I have to use some words here that may be a little different, right? Because of how we think of them. So, but the borrower on one space, on one end, to an investor on the other end, right? And trying to do that faster and with less friction, right? So if we think about a standard securitization or some other way of bringing capital into this space, about 52% of the revenue that's generated by the borrower, fees, income, all those, gets to the investor on the other side. We deliver in our space at least 64, trying almost 65, trying to get up to 70% of that to the investor. Why is that important, right? To both sides. One is if we can eliminate some of the friction in between through technology specifically, right? then it should lower the cost of entry to the borrower, right? So that you reduce that expense to the borrower, providing more opportunities and better cap rates, all those things. And then on the investor side, the same thing, right? A higher percentage of the return allows them to gain wealth on that side. So that in a summary is kind of what we see ourselves doing in this industry.
Yeah, yeah. And can I ask you a hard question? Is that okay?
Absolutely.
Okay.
Yeah.
Where are the breakdowns? In any pioneering industry, when you're pioneering something new, something fresh, this peer-to-peer relationship you've created, and where are the breakdowns in that so far in the learning curve of PeerStreet?
Great, actually, really good question. So I run what's called loan products, right? So our team essentially starts at the very beginning and oversees to the very end, right? So we're dealing with our product team in the middle. We're dealing with all those in the areas. So we can see a lot of those breakdowns, right? But here's a great example is we deal with lenders specifically. We don't work directly with borrowers, right? So it's actually more even complicated, right? Because as you're dealing with that. But we see communication is by far the most difficult thing, right? Is when a lender speaks to a borrower, they have to do it with confidence, right? They have to be able to say, hey, this is what I can do for you. And then they have to be able to communicate that to us, and then we have to eventually communicate that to an investor, right? That flow of communication is really difficult.
Yeah, and that's probably where the biggest issues and friction is.
Yeah, and where we're trying to identify, how do we help within that. And I'll go one further level on that. And again, what we see in this industry and where there's a lot of uptake is then think of all the third parties that are engaged outside of just those 3 or 4 basic individuals, right, or people. You've got appraisers, right? You've got title companies, closing escrow, inspection. I mean, all of these other areas that have to be absorbed in, right? So the better that we're able to ingest that, but then provide it in visibility and transparency so that people can make decisions. We can do that faster and do it in speed will be really helpful to, we think, to the whole industry, right? To everyone on both sides.
Sure.
Yeah, that touched on a question that I had, which was you're working with appraisers, you're working with all of these kind of third-party services. If you have lenders on a platform, how am I informed as somebody that has capital out on a marketplace and capital invested to then make the decision? That just seems like a relatively difficult task, but what does it look like today?
Yeah, so part of it is standardization, right? Is standardizing the credit box that something will come through. So an investor on one side has confidence in what is being delivered on the other. The other is making that information available, right? And so that individuals can see it and can understand it. And then I think to the borrower and to the lender, it's just really trying to be clear on what the expectation is as it relates to documentation and requirements and so forth, which are changing all the time and adjusting to this feedback loop that we try to create, which is, what does the demand investor want, and what are they requiring? What is the market, situation happening within the market, and then what are the borrowers and lenders seeing and demanding also?
Yeah. So. Yeah, that brings up a lot of interesting thoughts for sure. I am curious though on the actual economics of it all.
Yeah.
And what I'm curious is in this real estate space, we've seen a massive boom, right?
Yes.
I mean, it's unprecedented, year over year over year. But you're dealing with a different segment. You're dealing with probably somebody with passive income, a high net worth earner who's the investor who's providing some of that capital through. Right. And have you seen a slowdown, maybe their viewpoint? I'm curious, 2 things leading towards these 2 questions. Number 1, where do you feel the market's going? Are you bullish or bearish? And then are you seeing the same representation by your investors, all that capital sitting on the sideline that's being infused through the platform?
Right. Great again, interesting question, right? And today's market, I've been through a number of different market changes, right? And each one's different, right? I mean, so if anybody says they know what this market's going to do, they don't, right? And I think we can be reasonably assured that it's going to be different tomorrow than it is today. But the factors that are happening today are really unique to the circumstances that are happening. However, right, if we look at kind of the fundamentals of real estate and what's taking place in the market today, I'm optimistic. I'm not bullish. I think I'm optimistic that we're going back to normal, right? And I don't think we've been in a normal world for a while. And the hard part with normal, and this is, when you go from an interest rate of 0 to 1, or call it a quarter to 1, that's a big increase, right? Much different than when we were at 8 going to 9, right? I mean, that percentage change wasn't as big, right? So I think that's where we are on kind of the borrower side. I think the borrowers are going to say, gosh, the interest rates have gone up, but I look at it and go, heck, I did my very first mortgage loan at 10 and a half, right? I mean, 30-year fixed rate loan, right?
Right.
So, I look at today's interest rates still and go, man, they're fantastic, but compared to what, right?
Yeah.
On the other side, the investor on the other side wants confidence, and this is where I think we're the investor with the liquidity on the other side, and where I think this is actually what's happening in the market right now may be good for our space, is there's been a lot of opportunities to invest in a lot of different types of investments, whether it's crypto, NFTs, stock market, and everything else, right? Yeah. Well, when those are just going up, people don't perceive the risk of a downside, right? We're seeing that right now, right? I mean, if you were in a margin stock account, you may not have any money left, right? I mean, and it happened quickly. Real estate provides a much longer path to adjustment, right? So that's what we kind of see on the other side, on our investor side, is, hey, you can come in and get a really good, secured position return that is going to be there and solid, even if there is a drop in real estate prices, right? I mean, there's still a return probability there. It's not a 75% increase, but it's a fixed rate income. So we're positive. Actually, we think on the demand side, which is our investor side, we actually think we're going to see more flow come in because of some of the disruption in the other alternatives that have been out there.
Sure.
I'm pretty sure we can make an NFT of just this.
Yes.
Right? You know what I mean? And go sell it for $1 million. I think that just seems kind of interesting to me. For a lot of the viewers, they're probably thinking, okay, well, I might have an NFT. I might have a stammering of ETFs or something like that. And I'm looking at PeerStreet as a place to put capital. What should I expect in terms of maybe a range of return on capital?
Great. We're actually, and this is one of the areas that we're really excited about in the investor side of the business that we did. For a long time, PeerStreet, you had to go and pick your individual investment, right? So you had to invest in every property. Good part about that, bad part about that. Good part is, you have some control, right? And if you want to diversify, you can choose your diversification path. However, if one loan doesn't perform, you're that's that loan, right? And maybe your other one. So there's been some perception of, well, this is really risky, and it may have been that one loan that was risky. And again, you're looking at returns. I think our average return is 7% across the board for the last 5 years, right? I mean, that's a pretty significant number. We recently brought out during COVID what we called a pocket program, which was a smaller interest rate at like a 2%, but allowed liquidity, right? And so you could pull out your money on a monthly basis. We're now actually allowing you to invest from pocket into a loan, right? So again, it kind of works as it's not FDIC security. I mean, there's nothing with that,
right.
But it's it works similar to what would be a savings account, right? Hey, I can get some income as I park some money, right? We're now actually have just tested some secondary market. So if you're in a loan and you want to get out, that we have a trading partner that we can bid on a loan, and we've done this on some NPLs that is working. And then the last one that we're excited about, and we're again just in the beginning testing, is more of a fund portfolio product where you're cross collateralized. You know, you're investing, but it's across a number of mortgages, right? Sure. And ETF, if you want to think of it as an ETF or some other fund, essentially. But again, allowing people to invest with the confidence that there's, I don't have to go pick the individual loans. And we see that really important for the institutional investors and kind of the registered investment advisors, right? Where they have control of funds but don't want to take the time to go pick every option that's out there. Institutional investors, are continuing to be active, look for good quality assets. The challenge with institutional investors is they can move in and out of the market very quickly, right? Where the retail investor tends to stay over a much longer period of time.
Yeah, that makes sense. Yeah, it's great stuff. I believe, like you do, it's like nobody can predict where we're headed. I mean, it's like it's such unprecedented. I've heard all these economists saying, well, since 1897, we've got this data, and it's like, but there's no replicatable point in history that we have to point back and go, oh, well, that's next. But what seems to still be on the mind is inflation, rising housing costs, affordable housing issues, all of that. Do you believe that a product like this that's very tech infused, tech driven, has a place in solving affordable housing and all this money that needs to get to the marketplace for the guy that's willing to roll up his sleeves and put a house back on the market that's blighted?
Absolutely. I actually think it's really important, right? The private lending space is, and I come out of commercial banking, right? I started my career many years ago in commercial banking and spent a significant amount of time there. So the value of the private individual making that request, going into a private market, can move a lot faster, can look at those opportunities. I got into town yesterday and actually drove some neighborhoods to look at some of the properties that we're looking at, and it fit that mode exactly. It's like, these are the neighborhoods that need the investment of time, effort, and money to improve. And so, I'm excited. PeerStreet recently started an initiative called Enough, which is focused on people of color, the wealth gap, and we just have our first mentees that have come in, and we actually funded our first loan to one of those mentees in Atlanta.
That's awesome.
Actually, your hometown, right?
Yeah, sure.
And so looking forward to up there and get that. But again, and then what we're going to do is identify that loan differently on our website for our investors. So investors that want to invest in environmental, social, governance type of loans can do that individually also. I mean, think about that, right? I mean, right now you're either in a it's a great way of doing that. We're doing that through technology, right?
I love that.
Yeah, it's really exciting.
Where can they find out more about a program like that?
You can go to our website, and actually I think we have an Enough website, but PeerStreet.com. We'll do that. We actually hired a recently unbelievably great young man to be the executive director of that program.
That's
and
awesome.
So very, very excited. But
Congrats
we think
on that.
will unlock, we think again, creating wealth. Why, right? There's communities and individuals and locations that need, more capital invested, right? And that capital has to be provided by, I think, the private markets first, before many times the public markets have enough comfort and to be able to come in and do those.
That's great. Thank you so much. Appreciate it.
Yeah.
That's incredible. just thinking about Atlanta and affordable housing. Sonia is such a huge advocate of that. We should absolutely put you guys in touch. But nonetheless, Think Realty Nation, that's the show. If you want to learn more about PeerStreet, you have a little capital and you're like, hey, this affordable housing opportunity in investing and making a difference seems like it's for me. Check out PeerStreet.com. It's actually a very simple sign-up process. You create your account, select your account type, fill in your investor profile, and Bob's your uncle. And then you're looking at opportunities. Or maybe Tom's your uncle. You never know. Tom, thanks a lot. I certainly appreciate the time.
Guys, thank you very much.
Thank you.
Thank you.
Absolutely.
This podcast could not have been done without the help of our sponsors. Today's sponsor is rentalretirement.com. Just 20% return on investing in turnkey rentals sound attractive. Rental Retirement offers fully turnkey properties that are newly built or renovated, leased, managed, allowing you to invest with confidence out of state. Check them out. Go to www.renttoretirement.com. If you have any questions for myself, for Eddie, you can find us on thinkrealty.com. If you want to check out previous or future episodes of this awesome, spectacular podcast, /podcast. So thinkrealty.com/podcast. You can find us anywhere online at We Think Realty. Until next time, Think Realty Nation, happy investing.